Good evening, and welcome to the Tom's Trading Room Center here in Sarasota, Florida, for the 2020 stock debate. I'm not Chris Wallace. I am, however, moderating tonight's debate between three stocks, and I will give these three stocks 3 to 4 minutes each, roughly, to debate for technical, seasonal, and volatility patterns. There will be no interruptions during this debate, but you can comment below with your particular stock and whether you like it bullish or bearish. Now, let's begin. Hey YouTube Optionetics Power Profit Trade members, welcome to Tom's Trading Room, where we spot opportunity, create low risk or high probability trades, and we do that other than simply buying and holding the stock. I got a new report for you, and it's down below. It's called the Presidential Election Cycle, and you can grab that report by clicking on the links below. All right, so I've got three stocks for you I want you to take a look at. These three stocks, in my opinion, are set to move higher between now and Election Day, and I'm going to lay each one out for you. We're going to look at each one's technicals. We're going to look at each one's seasonal opportunities, and we're going to look at each one's volatility opportunities on the options. So let's get going. So let's start off with our first of three stocks to be playing towards the election in November. The first one is Starbucks. No one likes a cup of coffee better than I do, except millennials and Gen Y, who for some reason, whatever it may be, no matter how little money they got in their pockets, they're still going out, getting out of the house, going to Starbucks, going to coffee houses, even if they've got to go and grab it to go and bring it back. They need that fix. They need the ability to get out of that house, even if it's just a few minutes, to feel like they've gone somewhere, to bring their coffee back, to bring that $5 latte back and sip it. And so that's great for Starbucks, and that's what's pushing this stock higher. You can see here, back in May, we're talking about a mid-70 stock. Bottomed out down here around 72, below 72 in June, and then just really started to gain traction as we went into July and August, setting highs very close to 89. Not once, not twice, but most recently, as we're at $88.78. This is a very interesting triangle that's happening here. This is a bullish flag. This is bullish. And if you're just looking at the tops to the bottoms, it really is telling us that this stock could be heading near $100 a share technically. Let's look at what's going on seasonally. And looking at the money counter, what I did was I just ran a list of Starbucks going back to today's date, and really just getting an idea on if we started trading it in the next 10 days, went back 10 years to show the top 10 results. Here's what we got. We got charts on Starbucks going back 10 years that show, in some cases, 100%. That means 10 for 10 for the last 10 years, looking at the chart here for Starbucks in the next 28 days. Going forward the next 28 days, which takes us into mid-November, we see that in every year since 2010, this pattern has gone up. Now, take a look at 2016. That was the last time we had an election year, and the pattern showed a 4.5 move for Starbucks. Back in 2012, it was 2.77. It seems that what's happening on election years is we're getting some really big moves in this stock the month prior to election. 2018 was the best year on record with an $8.07 return during the pattern, going forward 28 days. Last year was one of those years where we didn't do much, but it didn't lose money either. Finally, let's take a look at this on Starbucks, and that is what we call the earnings effect ranker. Now, earnings are coming out on Starbucks here within the next 21 days. And if you take a look at this chart, what we've done here is I'm looking to see what the options do as we're heading into the election. And the options, when you're looking at this, the volatility typically climbs around 17% as we head into the earnings day. So if you add all this up, a chart that's moving higher, a seasonal chart that says we could continue to move higher, and a volatility chart heading into earnings saying that on average we go up 17% as we head to earnings, tells us that Starbucks may be very well one of the best stocks to trade as we head into election 2020. Next, we look at Papa John's Pizza. Papa John's has also benefited from the stay-at-home, work-at-home, and potentially vote-from-home audience that is going on right here in America. The stock, however, has pulled back, but let's take a look at it here in a different light. Started out just around $80 a share, has had some support levels. It's stabbed down into the low 70s, but the real support seems to be with these double lines that we see that are trading around 78 and again at around the $82 level. Papa John's from May up until August had become a mid-70 stock to over $100 a share. In fact, their last earnings were successful and better than expectations, but it did pull back during the time when the entire stock market pulled back in sympathy, going from around the 102, 103 area to where we sit today, just above $80 a share. The fact that it's sitting in this sweet spot between 78 and 83 make this very compelling for a stock that could be oversold right now. And with volatility not at the high point like it was back in August just prior to the earnings, might make even the options a potential buying opportunity. Let's see what the money calendar has to say for the next week or the next month as we go into October. And what you see here is that PZZA, Papa John's, is showing that again, using the 10-10-10 strategy, last 10 years back, looking at the next 10 days for an entry, and looking at that trade length at around the 30-day mark, we see that Papa John's has 70% of the time, 7 of the last 10 years, gone up during the mid-October to mid-November month range. All right, looking at the details, we can see here that 2017 was the worst that this pattern endured, with Papa John's stock being down $13.45 from the beginning of the pattern to the end of the pattern. But last year had one of its best results. That was $9.51 up. Also, 2016, which was an election year, also saw a $9.83 move. All right, so this is very interesting that in the last several years, the pattern's has shown us not only more movement to the upside. It had 2 years where it was down, but again, we're coming into an election year. Election years, the last 2 election years were positive. So what about earnings? And what do earnings say for potentially increased volatility, which is what we like as option traders? Well, the earnings ranker shows that as we head into earnings for Papa John's, which is going to be in about 27 days, as we can see here, we have an average 22% jump in implied volatility. That means that the options premiums for at-the-money options jump an average of 22% between now and the time that earnings are released. This is good to know because when we put all 3 of these together, if we see potentially a move where we could rebound back up, even if it's just up half the distance between where the low and the highs have been, and take us up to around $90 a share. Add that to the volatility climbing, and a money calendar, which is 7 for 10 in the last 10 years, and we could see Papa John's Pizza also benefit from this month heading into our November 2020 election. All right, let's take a look at our last of 3 stocks that could benefit from the 2020 election right now. And the last of our 3 stocks that we're looking at here in stocks that potentially could move up into our 2020 election is Altria, symbol MO, cigarettes. So I've talked about coffee, pizza, and cigarettes for the course of this video, and this was no different. I could have looked at Samuel Adams. We'll give that a special nomination, but that's a high-priced stock right there. But it, too, has the characteristics that we're seeing right now. In this case of Philip Morris, we've come down and we've hit this bottom. We've hit some support that occurred back here in May and June, and it has gotten some lift off that support as well. So definitely moving in the right direction, looking at the mid-40s for that top-out area of resistance. But between where we are now and where we're going, is it possible that we can make money in just a 3 or 4 point move in Philip Morris? Well, 3 or 4 point move gives that a 7.5 to 10% move on the stock, so definitely could be something that can make money not only in the stock but in options as well. Let's take a look and see what the money counter says for Philip Morris. And what you'll see, or Altria, excuse me, Altria does show that we've got a stock that 70% of the time to 80% of the time tends to go up. But for, in this case, 13 days on the top end. So we're really looking at something that really kind of tops out near the end of October, a shorter term seasonal trade. Look at the details and you'll see that last year, Philip Morris, or excuse me, Altria, I'm going to say it again, $3.29. 2018, $4.98. Look at the election year, though. The election year, $3.03, as it has moved higher, too. Right? So, 7 of the last 10 years, this pattern's moved higher. I will mention this. The 3 years that it moved against us, very, very little. I mean, you almost don't even see it on the screen. 6 cents back here in 2011. 2012, it lost 53 cents during the pattern. And in 2017, we see $1.16 on the drop. So a very good reward to risk ratio when you're looking at the seasonal pattern. Finally, is there an earnings effect in Altria going forward? Altria does have earnings that are going to occur in 22 days. In fact, their earnings are estimated at the end of the month. And you can see here, based on this median percentage right here, we're seeing a 10.39% average move in option prices, and this is just the time value of options, all right? So if we see time value going up as we get closer to earnings, this too is a plus. If you like this stock to the upside, maybe you technically like it, bouncing off support. Maybe you're looking at what it's done in the past 10 years, and that this probability of going higher might make sense. And if you're interested in call options, you take 1 plus 1, technical plus seasonal, and then you add in the fact that the options typically go higher as we get closer to those earnings, and this too might make a stock to look at and potentially trade as we head into our 2020 election. Hey, thanks for joining me on today's video. Like I said before, show us some love, hit that like button below, subscribe to the videos, you'll get them as soon as they're uploaded. I'll see you on the next one. Bye now.